One of Sui's best features, DeepBook, is launching a token. Now, DeepBook is Sui's on-chain liquidity book that any decentralized exchange on Sui can pull from or add to. That just means everyone is sharing this liquidity and you get the best prices on your trade. For example, you can see that Cetus is competing with the largest crypto exchanges when it comes to liquidity and trading volume. So in this video, we're going to go over how they do that, the Deep Token Airdrop, and the Deep Tokenomics. But first, disclaimer, this video is sponsored by the Sui Foundation, and I'm just here to educate and not speculate. Speculating is for other non-sponsored content, so I'm just here to share what DeepBook is and how you can participate in the airdrop and get value from this feature. All right, with that, let's get started. What is DeepBook? The backbone of Sui DeFi liquidity. Not that helpful? Let's go into the white paper. We can get a lot of technical stuff, or we can go into the docs, and DeepBook is a next generation, decentralized, central limit order book, otherwise known as a CLOB, built on Sui. DeepBook leverages Sui's parallel execution and low transaction fees to bring highly performant and low latency exchanges on chain, meaning trades happen quickly and you get a very good price. Still a little technical, but let's break that down. DeepBook is the liquidity layer of the Sui blockchain, so any decentralized exchange can use that liquidity and they can add to that liquidity, and there's incentives for doing so. Because if you want to provide users with the best price possible, you pull all this liquidity together so you can get the best price. So as an example, liquidity is very different depending on centralized exchanges. They don't have all the tokens. They have a small pool of tokens that they allow users to trade from, provided from their market makers. So that means you might get a different price depending on the centralized exchange you use, and that also depends on how much you're buying. So we're going to look at an example, Navi. This is a decentralized exchange on the Sui blockchain. Zooming out a little bit, we can see that there are some decentralized exchanges here and some centralized exchanges here noted by CEX and DEX. Now what we want to sort by is plus 2%, minus 2% depth, which means if you buy $27,000 worth of the NavX token on Cetus, that's going to move the price by 2%. Whereas if you buy $48 worth of Navi on CoinEx, it's going to move the price by 2%, meaning you are not going to get a good price if you buy more than $10 worth of tokens. Now this is happening because these centralized exchanges have fragmented liquidity. That means they only have a set of tokens that they can pull from, provided by their market makers, and they have to decide how much of a token they want to hold for trading. And it also depends on the users on there. Are they actively trading it? If not, you won't be getting a good price. And if we look at this chart again, if we look at Cetus, a decentralized exchange on Sui, you can buy $27,000 worth of this token before the price moves 2%. Whereas the next best price you could get would be on Gate.io by buying $3,000. So if you are going to make any significant trades, you're going to get the best price by using DeepBook on Sui. But there is no interface for DeepBook. DeepBook is just the infrastructure layer on the Sui blockchain. So as we mentioned earlier, any exchange can pull from it or add to that liquidity. So if you're going to trade on DeepBook, you would be using the decentralized exchanges that are available, like Aftermath Finance, KreaDex, Cetus, Flow Finance, Hop Aggregator, Turbos, or 7K Aggregator, and we can probably expect more in the future because Sui is an actively growing ecosystem. I forgot to mention liquidity. What does that mean? So if you're new to crypto, if you're new to DeFi, liquidity just means coins that are available to trade on that exchange. So that happens for a centralized exchange and decentralized exchange. If you have poor liquidity, that means you don't have enough coins to trade and you're going to get a bad price. And if you're in DeFi, you can put up your own liquidity to a decentralized exchange to earn fees for doing that. So let's say I have $100 worth of USDC and $100 worth of Sui. I can put that up on a decentralized exchange, and then that gets used by DeepBook, the liquidity layer of Sui, and then whenever someone makes a trade between Sui and USDC, I earn some fees, depending on the parameters I set, of course, but I earn fees whenever someone uses my liquidity or whenever someone uses the coins that I put up to be available for trade. So whenever we talk liquidity, that just means the coins that are available to trade. The DeepBook Airdrop. If you have one of these NFTs, the amount is going to be very different depending on how much you are trading on an eligible decentralized exchange, and you would have received the DeepBook Claim NFT, something like this, in your wallet. Do not delete it, do not get rid of it. This is your claim to the DeepBook Airdrop. Now, if you did receive one of these NFTs, you want to participate in this Galaxy campaign. So if you go to DeepBook on Sui, the official X account, this is another chance to prove your mastery on DeepBook. So this is for people that hold a DeepBook Claim NFT. You need to validate your NFT on the DeepBook Discord, log into Galaxy, connect your Discord, and complete the quiz to show off your DeepBook expertise. Now, the more quizzes you complete, the better prepared you'll be for what's coming next. This could be another airdrop. This could increase your current airdrop. We have to speculate just a little bit here. So now let's take a look at the Deep Tokenomics. Deep's utility, as the cornerstone of DeepBook, Deep facilitates seamless transactions, incentivizes liquidity provision, which means you would receive rewards in the form of Deep token for providing liquidity, and aligns the interests of all participants in our growing DeFi ecosystem. Payment. Deep token is used for payments of trading fees and pool creation fees in DeepBook. By using a native currency, DeepBook offers a cohesive and unified trading experience. Liquidity. Deep token enhances trading liquidity within the DeepBook pools by offering rebates to market makers. That means you'll be getting a discount on your trades during low liquidity periods and volume discounts to liquidity takers. These mechanisms ensure minimal slippage and a robust trading environment, making Deep ideal for professional traders and institutional investors. Then we have governance. The Deep token enables pool-level governance by adjusting staking requirements and fees. Its quasi-concave voting system ensures small voters have a significant voice while preventing governance capture by large holders. I like this. This is not something I've seen in other governance tokens. Normally, the richest people have the biggest voice, so that is good for Deep. More on the tokenomics. It is going to be called Deep. There is going to be a 10 billion supply. 2.5 billion will be the initial circulating supply. 25% of the supply is unlocked at Genesis. Tokens will be released over 7 years. And of that 25% that is unlocked when the token launches, 10% of that, or well, 10% of the total, will be for the initial community airdrop. So we can see what that looks like. When the token launches, there is going to be 25% of the token available. 10% of that is the initial community airdrop. Then we have about 28% for core contributors and early backers. This allocation represents core contributors who have supported the engineering, infrastructure, security, growth, and operations of the DeepBook protocol. Then we have about 61% for ecosystem growth. 14% will be unlocked at TGE, that is the token generation event, that is when the token launches, followed by a 7-year unlock. This portion of the allocation supports long-term growth of the ecosystem and supports developer grants, community programs, and community initiatives. Now, community initiatives could be airdrops, that could be rewards. Those are things to get the community active, and the community likes rewards, so that's where you have to follow along and find those opportunities. And then this is what the token unlocks look over the next 7 years. We have one jump here after the first 12 months, and then a very gradual curve after that. Now let's take a deeper look at the Deep utility, because the Deep token is used for the payment of trading fees. So if there's a lot of trading, there's a lot of trading fees, and a lot of the Deep token is used. So looking at DeFi Llama, we look at the TVL of Sui, it's over $1 billion. And as of recently, the trading volume has been in the hundreds of millions of dollars for the Sui blockchain. So that means a lot of Deep token is going to be used for those trading fees and pool creation fees in DeepBook. Additionally, the token offers rebates to market makers, so that's people providing liquidity to DeepBook. So to sum that up, the utility of the Deep token is to incentivize liquidity, which helps provide a better experience for people using the Sui blockchain. All right, I hope all of that made sense, and I hope you were eligible for a DeepBook airdrop. If you aren't, there's other opportunities out there in the Sui blockchain, so be sure to follow this channel for more of those opportunities. If this video was helpful, you know what to do, and with that, I hope you got your full value for today.